Good evening, Dan Fitzpatrick here, and I just want to cover Sage here real quick. This was a trade that we made in the forum today. I want to tell you, when you go into Stock Market Mentor in the trading room, there's typically a lot of action in there before the opening rotation, before 9:30 starts. And one of the stocks that people were talking about was Sage Therapeutics. They were down on bad news on one of their phase 3 trials. The damn stock's down 60%. Okay. That's like unless there's literally nothing left of the company, or unless they announce that Adam Newman is the new CEO of the company, the stock is not a zero. And so you see it go down you go down that much. You see the stock pull down 60%, and you have to figure that there are shorts in this and they're going to cover. The stock's not just going to keep going. And so what you do, and this is what we did. This is where all the trading action was. This is the way the stock opened first thing in the morning. And then 5 minutes into the show, it's up here above $60, right? So it opened clear down here. It's above $60, and this is when we're buying the stock. Now, a little analysis here. The idea has to be that on this first 5-minute bar, that's the most important bar of the day, other than the one that you might frequent on the way home after a good trading day, but that's for another subject. The most important bar on a big, massive sell-off like this is the first one, because once trading opens, this will tell you whether the selling is done. I mean, you're always going to see this big, massive volume spike to begin with, but the question is, what happens after that? What happens when all the initial market on open orders, meaning buy at the market on open or sell at the market on the open, what happens when all of those are filled? Which way is the stock going? So if the stock, after this first 5 minutes, started to go lower, like to a new low, then you totally stay away from the stock. Don't sit there. It's just a trade that kind of you thought might happen, but it didn't. You don't want to lean against it and bet on it going further. You just say, wow, I was looking to trade an oversold bounce, and it's starting to look to me like it's an oversold trounce, running up and then printing new lows here. So you'd totally stay away from that. Well, that's not what happened here. The stock trades sideways here. I know a lot of people got in it in the trading room, and then the stock runs up a bit, and then it actually stopped. It actually, the NASDAQ halted trading on volatility. Now, I guess I don't really care that much, but it seems to me like that's something kind of weird. And maybe somebody said like, hey, hang on, Saul, we need to stop the stock here for a minute because, I got to get my books in order or something. I don't know. I'm just pulling that out of my backside. It just seemed funny to me that I'm not looking at the stock trading up in a volatile way. I'm just seeing the stock that's down 60% starting to rebound. Hello, that's what you're expecting. So anyway, the stock runs up here. It stops trading for a while and then cools off, and then the whole rest of the day, the stock essentially traded sideways, but it did get this one spurt up here at 72.71. One of our members, and you can see it actually stopped trading twice. One of our members got out above $70. I think he might have even said $72. So we had some good trades here on this, and I would just tell you, this is now yesterday's opportunity. But look for stocks that do this. And focus on that first 5-minute bar. Focus when you get a big, massive sell-off like this. Just remember, there's a lot of orders behind the initial bout of trading. And so what you're waiting for is an indication of which way those orders are stacked, towards the buy side or the sell side. So you look at where the stock opened, where the stock closes, at the end of that first 5 minutes, and that's your key. You're looking for this kind of move. You're not looking for like this big a downdraft here, 60%. You're not looking for the stock to do this, run up a little more, and then just sell off more. That's just not the way stocks trade. I could explain it in more detail why, but just trust me on that. Stock that's down 60% isn't going to rebound 5 or 10% in the morning and then sell more. The stock dynamics don't work that way. So you can look at this in the same way on a move to the upside. Let's say this was a big, massive rally to the upside. If the stock's up 60% or 50%, wait 5 minutes. If the stock continues lower, then you need to short that stock and you keep your stop just above the opening print. If, on the other hand, the stock is up that much, closes higher than it opened, and then it keeps going, frankly, you can buy that stock because everybody else is. So anyway, I hope this kind of intraday dynamics helps you, but you can make a lot of money. Think of it as income. You can make some good income just trading these big moves like this. You just don't want to overstay your welcome. You just take a trade for 3 or 4%, if you can get it, and say, thank you very much, sir. Got to go now. Got to get to my job. So anyway, that's all I got. I'll see you later.